Hello, folks. Appreciate your patience. It is April 26th, 2020. This is our weekend review for the ICT Mentorship. All right, so we have our economic calendar here. The heavy hitters, this one I'm just going to cover. 10 a.m., we have consumer confidence for dollar high impact on Tuesday. Nothing to really speak of on Monday. Now, the filtering I have for Forex Factory's calendar, which is what we use every week here. I have Aussie dollar, Australian dollar, Canadian dollar, euro, pound, and dollar as my filters. So this is what shows up. I never have yen or Swissy in my filters for this calendar. So on Tuesday at 9:30 p.m. we have CPI high impact for Aussie, and Wednesday high impact 8:30 a.m. advanced GDP for dollar, and 10 a.m. we have pending home sales medium impact, 2 p.m. FOMC statement high impact and Fed funds rate for the dollar, then the press conference at 2:30. Thursday we have medium impact flash GDP for Euro, London Open. Euro has main refinancing rate and monetary policy statement at 7:45 a.m. on Thursday. 8:30 high impact Canadian dollar GDP, and European Central Bank press conference high impact for Euro at 8:30 as well, and unemployment claims once again for the dollar with high impact. It'll be interesting to see if that number climbs again above their forecast. They're forecasting 3.5 million this time, and last week I mentioned before we did see the numbers that we would be over their expectation, and it was over. So it'll probably be above 3.5 million again. This is the number I'm watching. I think this is the important one. We want to see this number start changing. That'll be the real testimony to things improving. All right, so personal spending medium impact and Chicago PMI at 9:45 on Thursday, medium impact for the dollar. And then ISM manufacturing PMI high impact for the dollar at 10 a.m. All right, so real quick, this will be the little bit of commentary regarding the COVID-19 global shutdown. The number of doctors that are coming out, and I watched one of the members in our community here. He shared a video, which I'm glad he did because I really enjoyed the two doctors that spoke about it. You can go on my Twitter feed, and one I tweeted to say I agree with them. That's the two videos I'm referring to here. Listen, even if we open up everything, okay, even if we open up the economy again, there's a lot of people that are still scared, and people are still also without jobs. So we can say, yay, we're going to try to go back to normal with the social distancing and all that business. It still won't change, and it has not changed and will not change immediately the impacts that this has caused. So with all the fellas out there that think they've figured all of the things out, or it's just a scam, it's a con, it's a hoax, I believe it was inflated. Yes, I believe it's obviously been manipulated in terms of the numbers, but the economic fallout, that's the real focus here, and that's what I've been sticking with. I've been staying on that same premise from get-go. Like when we were talking about it early February, I want everyone to just get prepared to get what they could get for supplies, not because they were all going to get sick, but because I know people and they're going to go out there and buy up everything. So that has been my focus. I don't believe that I was accelerated or overly animated in regards to my commentary in response to everything. I thought I did a pretty balanced approach to doing so. There's a lot of fear mongering. There's a lot of denialists. Okay. And I tried to stay right in the middle of the road, and I wanted to wait and see how things panned out. And one of the things that I found that was a little alarming is the people that were available for me to be ringing me up when I go to the cashiers at a grocery store or a Target to get things that I didn't really have at the time, but wanted to get them. They weren't getting sick. So it's not as bad as people were expecting. And I was making room for it to be bad, but I was more interested in seeing how we responded to all this stuff. And my assumptions were right in regards to blown up fear. And I've maintained, don't be fearful. There's no reason to panic, but you should be prepared, not because you're going to get sick, but because you should have your resources, your food, your things that you normally would use. Just if you can afford it, get a couple things extra and prepare for a lack of supply. And it happened. Okay, so I'm thankful that I did it. I'm thankful that those of you who listened did it. But, are we all sick? No. Have I been ill this year? Yes. And I think when I was coughing, and every time I tried to talk, I coughed and coughed and coughed, and I said I had sore ribs for a while. I think I actually had this stuff, and I felt bad for like 3-4 days. But other than the cough, it just felt like a cold. I don't know how to describe it other than that. But I may not have had it, but everything that I can think of back in January, it leads me to believe that I probably had whatever this crud is. But people are getting restless, and they're demanding everything opens up, and they're making a point to call out that they're not taking any vaccines that they create. And I like that idea. I like the idea of that type of resistance. I like it because, I'm not of the opinion that vaccines are proven effective. I'm not one for sticking that stuff in us. And if you really study what goes in them, and I'm not talking about the quack jobs on YouTube, okay? There are medical professionals out there that are coming out now and admitting that there's no reason to be putting the things they put in these vaccines. That they're not meant for your well-being. So that's my view on vaccinations, and it's not just this vaccination I'm against. I'm against a lot of them. Now, a coronavirus isn't going to be vaccinated. Okay, we've had it, and they have not been able to effectively remove the cold yet. Okay, we get a flu shot vaccine given out to everybody, and they have not beat the flu. Okay, so it's not effective. It's not effective. It's absolutely nonsense. So, there's a lot of people in here are going to disagree with that. And then, if you want to disagree with me, I'm welcome to debate that kind of stuff on Twitter. Okay, but I'm not here to try to twist you and mold your mind to what I believe. I'm responding to emails. So, do I believe that we're, past the worst of it? I don't know. Like I said, I don't know what's likely to happen next in regards to all this stuff. But I do agree with the two doctors that said the longer you spend time away from the natural introduction of viruses and bacteria, the more likely you are to get sick later on, which fits a perfect narrative that, everyone's been staying indoors, not getting sunlight, getting vitamin D, which is the best source for your immune system being improved and boosted rather. You have to get yourself 15-20 minutes a day of sunlight. And everyone's been scared to death to stay in their house, and it's like this. Okay, there are people that have spent time outside of normal everyday contact. And perfect example of that, you can do the research on this too. Researchers and scientists that spent time in Antarctica for a couple months, when they come back into the general population, they get really sick very easily, and they're very susceptible to getting ill to things that we would in a normal day brush off with our immune system because we're always out there getting these things. Okay, and our body does what it's been designed to do, which is defeat it. And this is what I'm saying. Like when the wave 2 comes, I think my expectation was they would keep everything locked down through the summer, which would drive people absolutely nuts. And they would make an attempt right before the fall starts, like the last couple weeks of August, maybe even if not the month of August, they would do a complete relaxing of all of the limitations that we're supposed to have on a social basis, allowing for people to feel like, okay, we got through that, but also remembering how hard it was. And then when people get sick because of the natural and reintroducing of bacteria, virus that's out there normally every single day, our bodies are fighting cancer. Every single day they're fighting the flu. Every single day they're fighting, diseases. It's what we do. Our bodies are made that way. And because we have been allowed and forced with control mechanisms and fear, we have been, suppressing our immune systems. So when they release that a little bit and people start going out there, all of a sudden you're going to get sick, and people are going to have upper respiratory infections. And now it's seasonal pollen stuff, which I always get screwed up from seasonal allergies. And it's going to make people think they're getting it, if they get a little bit of sick, when it ain't really that. It's just your immune system's been suppressed, and you have to be out there exposing yourself and getting out there and doing things. And that's what I believe. If we have a surge in illnesses, it's going to fit their narrative for seeing a justification for saying, see, we told you wave 2 was coming, so you better believe everything we tell you to do this time, which who knows what liberties and freedoms they're going to attack, and try to pull away from all of us. And that's my stance. I'm against overreach for the government. I'm not, trying to make anyone believe a Democratic or a Republican point of view. I'm a monarchist. Okay, I'm looking for a coming king. These people that are in our government, these people have opinions, and they're being told also what to say. They have a narrative they have to follow. I will go and side with the doctors that are actually seeing these things on the ground, dealing with them, over any Dr. Fauci's or WHO or Trump or his advisors. I don't care what these people say. Okay. One of the doctors in the video that one of our members suggested on Twitter, again, the one I responded to saying I agree with them, that I probably should just put it in our forum, that way make it easier. I might do that. But they made a really good remark in response to some of the reporters saying, so what are you saying? You're saying you know more than the World Health Organization, which they're a bunch of frauds anyway. They're just like a McDonald's. They're a private company, okay, and for profit. And they also have charitable things that they set up too. It's all corruption. It's all corrupt. And these are the same people that are supposed to save our lives. I believe that they made a veiled threat to Trump because he defunded them and said, I'm not sending any more money. He said, well, look, it's important for the United States to resume as the number one contributor. And that way the United States can remain safe. Well, I don't know what that meant to you, but I saw that as, well, maybe something might just not stay in where it's supposed to be. Okay. That's how I maybe it's too much tinfoil hat, but for some of you, but that's how I took it. And I don't think we should be funding any of that stuff, period. We shouldn't be funding the United Nations. We should not be funding World Health Organizations. We shouldn't be doing any of that stuff. Okay, period. NATO, I don't think we should be doing that either. Okay, and like I said, I'm not here to be everybody's friend. But if I'm asked, these are my opinions. This is my stance. And it's not meant for you to fall in line with what I believe. You should be an independent thinker. And there's a lot of things that I have been challenged with over the past couple of years, really. And it's made me second guess some of the things that I've held as my own hard and fast opinions. And I've bent on some of them because of new revelation about some of the things that have been made available in recent years because of new insight, new data, new facts. And I'm not trying to pretend or even pantomime like I have everything figured out, because I don't. I take it just like you guys, day by day, trying to see what's going on. But I do not watch the news. I completely do not watch any of the Trump stuff anymore. I haven't watched it in weeks. It's just nonsense that he's doing. just wasteful time. It's just wasteful time. It's for him to stay in the limelight while the competition, they can't campaign. And I'm not saying I'm Trump. I'm not saying I'm against Biden. I'm saying that I'm staying right in the middle of the road, saying that Trump has a built-in rally anytime he goes on TV. Biden could be doing whatever he wants to do with, YouTube, for real. I mean, he could reach everybody. He doesn't have to be in any one particular state. He could reach the entire world on YouTube. And that's what I would be doing if I was campaigning against Trump. I would just say, for all your safety, we don't need to congregate. I'm wanting your vote. And Trump is, building all these, this theater about how he's beating this enemy. And I think the enemy is just too inflated. It's been given too much of a street cred. Okay. And I'm not saying there isn't a virus. I'm not saying that. Just like there's doctors, I felt that they were able to articulate how I have been thinking, but were not able to articulate because I'm not a doctor. Okay. I'm not a medical professional. But my opinion was being formed on the basis of listening to doctors. Like, we have doctors in our group here. We have real physicians in this community here. And the feedback that I was getting from them through the last couple months, and some of the feedback that I have, because I have people that are in my family, I have aunts that are the nurses. They're familiar with all this stuff. They've seen this stuff before and they deal with it. And every one of us is entitled to an opinion. And my only focus is, if I get a question, I want to answer it. But if it's a question that keeps coming up a lot, I will bring it up in these videos, because I'm hoping that it will be a blanket response, so it reduces the number of emails, which I need that to happen because I had too many of them coming in, and it's not fair for you to be sitting around expecting me to get to your email weeks later because I have too many of them. And real quick, let me just make a suggestion. If you need me to talk about something, and you're wanting to email me about it, or you need more clarification about something, or you just want me to bring more foundation to light about a specific topic or whatever, when you send me an email, just give me that necessity that you have to have or feel like you need to have, and put that in the email title. If it's too long for the email title window, it's probably too much, because that would be much more useful to me. And don't expect a response, because that way it'll prompt me. I'll write it down in my little notes. That way, when I'm talking in the videos, I will touch on those topics. That way it'll scratch your itch and answer your question, hopefully. And it'll be a much more efficient way of me going through emails, because it's like a text. Okay. Instead of, some of you have like these real long-winded emails, and they're full of very supportive and appreciative comments. And I'm thankful for that. But at this stage, I have so many emails. I don't have the time to sit down and give those emails the time that they deserve, and be able to sit down and write a response that feels genuine, feels like I've given you the attention that you've put into sending me the initial email. I appreciate all that stuff. Okay, if you want to do those types of things, you can do it in the forum for real when you're a charter member, because I get it. I understand, but it's unfair for me to sit down in front of an email box, okay, and even make an attempt at this point to try to go through every single one of those emails. There's so many of them. I'm not going to be able to get to them. Like, I'm not. I know I'm not. So at this point, what I'm doing is I'm just going through them, skimming, and if I see something that the general feel for what the email is talking about, then I write down in my notes what I'll talk about, which is pretty much what this monologue has been. And I'm hoping that you understand that, because just imagine you get 900 plus emails a day. All right. And say the average turnaround time is 3 to 5 minutes. Now, some of them are longer, but say they're 3 to 5 minutes. How much could you effectively get done in a day if you tried to even do half of that a day? And it just keeps compounding more and more and more and more. So I'm the only one here in this community, this organization, this company, Okay. I'm ICT. So my time is still the same as yours. I still have only 24 hours, and I still have a family. I still have my own personal desires. I want to do what I like to do too, and still facilitate the means for running this mentorship. So it's hard. It's very, very difficult to balance all that. And I don't have enough time. I literally don't have enough time to answer the number of emails that are coming in. And honestly, 90% of them are emails that I would reply to with those answers are given to you in later lessons in the commentary. And it doesn't feel like that's a satisfying answer when you get it. I know, I get it, but it's true. And that's the part that makes this mentorship difficult, because you have to wait to get to new content or me touching on something and saying, okay, this is where, remember we talked about this in month 4, and we blend that in here, and this is where it's useful for this practice, for this moment in the analysis where it fits. Otherwise, we don't even reach for it because it's not required at that moment or stage of your analysis. That's the mentorship. It's not those lessons that you're getting access to every single month. Like I said, those things could be put on YouTube and it won't do anything except for, oh, I understand when he says this or that, because it's conceptually outlined. But that same individual concept, it's like an order block, a down closed candle right before the up move. Everybody knows that on YouTube now. Everyone knows it. But not everybody can go down into a chart and say, yeah, that's the order block before it goes down and hits it and gives a return and starts to rally up. They're not going to be able to effectively say which one of those candles are going to do something like that because they haven't been mentored by me. Okay. That's the gravity of what I'm trying to say here is your mentorship, and you're paying to be here. You pay all those months, 13 months total, because it's 12 months payments and then one charter member payment. After that, you don't pay anymore, but you are in this community as long as you're respectful and maintain the terms of use and don't violate anything. You're here forever. You're always part of the group, and I'm going to always be talking about the marketplace and doing things and showing, teaching and all that. But you have to go through that process. You can't just, I'm going to skip over things, because it don't work that way. Okay. Some of you have been emailing that you have been made redundant or lost your job or on layoff or drawing unemployment, and you normally don't have a whole lot of time because you're working and you're doing your thing normally. And I hold everybody to a monthly rotation where you have to go and do the whole month. You have to do the whole month. My wife has asked me if I would consider doing every 2 weeks, so that way you guys could not, I don't want to do it. I really personally, I don't want to do it. I really don't want to do it. But she said, look, there's a lot of people home. They have a lot more time now. Did I ever consider allowing the next rotation to the next month faster than the 4 weeks that I hold everybody to do it in 2 weeks now? For those that can do it. I'm not saying it's a mandatory thing. I'm not even saying I'm going to do it. But my wife brought that up, and a lot of you have emailed me about that. So I'm not saying I have ignored that. I thought about it when they first shut everything down. I'm like, man, there's a lot of time people have right now. But also, I know that there's a ton of content, and it's almost like forcing you to feel like you're rushing through it, which isn't going to be good for you. Okay, it's not going to be good for you because you can't retain everything. So I am in discussions with my wife in regards to whether or not that's going to be allowed. I don't personally think it will, but I have considered it, and she's made a good point and a good case for it. But I don't know yet at this month. I don't know. Okay, I might, if we stay locked down on May 1st, then I might consider it. But if we aren't, then there's no reason to consider doing that, because we're probably working towards moving to not a normal thing in terms of pre-lockdown, pre-COVID-19, but at least something to the effect that would allow us to resume normal expectations, and there shouldn't be any reason to be accelerated, because we don't do accelerated payments here as of now, and that was even mentioned in the terms of use before you signed up. So anyway, very, very long-winded 25 minutes of email topics that I wanted to cover, and we covered the economic calendar. I gave you my viewpoints on what's going to happen, in my opinion. And again, I don't claim to be a professional in regards to that, but just think about that in terms of suppressed immune systems, like the physicians say in those videos that I agree with. These guys are doctors, okay? And they're not the first doctors I heard say that, but they did it in such a way what was very eloquent. It was very measured. Even when one of the reporters, you can clearly hear he's got a mask on, and he's like, but don't you think that the world's ending? Don't you think, that's the stance he was holding. And they just were very respectful, very patient. And even when he was over talking them, okay, they would come back and just lay facts on him and just beat him up with facts politely, and just say, look, Dr. Fauci, they have a lot of respect for him and all that business, but he's talking from an ivory tower. We're here doing it. We're seeing it. And that to me speaks volumes. And that's like how I live. I live by that. Unless you're hearing from somebody that actually is doing it and has done it, has got the scars to prove it, and is living it day by day, then you really probably shouldn't be listening to them. And it's just a perfect illustration of what I talk about in terms of mentorship and learning from people that say they know how to do this stuff in the marketplace, and being in front of somebody that knows exactly what they're doing. So anyway, let's go over to the charts and see what's going on. All right, so here's the dollar index. This is our daily chart. And let me zoom in a little bit. And I appreciate everybody telling me how to get rid of these buttons down here. Please don't send me any more emails. I've got about 70 of them. All right, so I mentioned last week that I was not certain as to what we would see come in the form of delivery of price. And I'm not going to go over this commentary again in regards to give yourself permission to do that or not know something, because it's a good thing. But looking at how price was delivered, here's Friday, Thursday, Wednesday, Tuesday, Monday. It was a steady updraft towards trying to run this high out. We did get to the top of the balanced price range again, and we swept that. And I would have expected it really to take that high out. So even though it kind of did one of the scenarios, and again, I'm not claiming, see, I told you I was right about something, because I don't play that game. I'm saying here that this has proven that my assumptions of not knowing what the market's going to do and being comfortable with that, that was the right thing to do. Because even though the market did one or two little subtle nuances of the things I was looking for, it really didn't do what I wanted it to do, or even gave an explanation for. I wanted to see this high get swept if it was going to go up, okay, and do that on the unemployment numbers. It didn't do that. It just swept the balanced price range and left this high intact. This high here at 100.93, and the high on Friday comes in at 100.87. So it doesn't really fit the model there. It does run the rejection block, which is, I guess, is fine, but it still wouldn't have been something I was looking for. I didn't outline it, didn't call for it, so there's really nothing I can hang my hat on in response to what I talked about last week, except for the fact that now looking at it, and this is what you're supposed to be doing, when you don't get anything right, okay, if you get everything wrong in your analysis leading into a new week, the way we go back and refer to that and reflect on it is, now I can see some of the things that I looked for were here. A lot of the things that I did not expect to see did come to fruition, but the uncertainty, the aspects that led to me assuming that it would be better for me to not have an opinion last week, I see the most of that. And if you look at the wicks and the tails of those candles on Thursday and Wednesday, it really illustrates the just the back and forth, uncertain, not real clear one-sidedness of the marketplace. Even though, and yes, for some of you will say, yeah, well, clearly it was an up week, right? But if it doesn't match or fit something that I'm comfortable with in terms of trading, I have to be able to take my hand off of it and say, okay, I'm not going to touch this, because it might bite me. It might be harmful to me. And I'm not going to be confused about that. And by not having any confusion about it or any emotional commitment to it, whether I'm right or wrong on the other end of the spectrum, like right now looking back, it's perfect hindsight now. And I'm content with it, not because it sounds like it's the best way of saying it, to save face or whatever. I already told you last week I wasn't sure. And now looking at it post Friday's close, I'm even more thankful that I held the stance that I had, because it didn't really do the things I wanted it to do. So I know some of you were tweeting to me, oh, it did everything you said. It really didn't. It didn't do those things. The order block was swept. The balanced price range was swept. And it just, to me, it just looks like they have been trying to lift this thing and kill any short. This is what it looks and feels like to me. Right? The lack of any real consistent follow through on the upside. I mean, yeah, you can, okay, we have higher highs and higher lows. That's an uptrend. Well, on a 1 hour chart, I'm trying to look on a daily chart what the next intermediate term price swing is going to be. So I can take this down into any time frame and justify a view that would fulfill or side with my narrative, to make a trade. But as I mentioned in the last video where I talked about what makes a high probability trade setup for me, is it has to be so one-sided and defined in such a way where if I look at price action, it's no other way but to see it go higher or lower, and have a logical risk to reward model around it. So with all that said, I don't think that we are seeing a sustained prolonged run on the dollar. Not higher. I don't see that. I still see this as just pressing it higher. We didn't get above these relative equal highs. I was expecting that also as a potential reason to run higher, but then watch it, see if it runs those and rejects. The only thing, again, it's just the balanced price range, the high of that balanced price range on the daily chart. That's what we rated. And we gave it the ghost. I like the fact that how it reacted on the order block here. Again, this level here is the low of the order block on the daily chart. And that in itself, coupled with the institutional order flow entry drill, here's your high, 100.48. This candle's high here, 100.49. What does it do after it does that? Trade softer. What's it run? This low. So this setup right here, fair value gap, order block, and order flow entry drill as your entry technique, and targeting liquidity below an old low. That's not a lot of movement, okay? But that's a setup. If we drop down to an hour, 15-minute chart from the hourly, you can see that relative equal lows. So from here to here, that's your price run, and then attacking the liquidity below that. Right below this low to the left, what do you see? Fair value gap right there, which is a balanced price range because you have one single candle. So in that area, we would see a realistic downside objective. From here. So if we see the dollar with the ability to frame a run from there to here, that would be a logical long setup for foreign currency, euro dollar, pound dollar, something to that effect. But since we're in an uncertain market, at least I am deeming it a uncertain market on the daily chart, this is how you can go back into the charts on the lower time frames and practice real time, or go in and find something in hindsight, dress it all up on your chart so that way it's like you were watching it live, and by annotating your chart and screen capturing it and putting it in your journal and then reflecting on it a couple days later, your brain remembers it, it sees it, and it's like that little footprint. If you're a tracker in the woods, you're trying to track a deer or an elk or a moose, a hunter can see those tracks on the ground and know what he's looking for and stalking. By you exposing yourself and with experience, even in hindsight capacity, you train your eye to see it over and over and over again, and it activates your reticular activating system, which is the same thing that happens when you buy a car. All of a sudden, now you see your car everywhere. It's like everybody copied off of you. I bought this car last week or 2 weeks ago, and now everybody's got the same car. Okay, they were always out there, but you have now activated your reticular activating system because you have drawn a affinity to that car. So now it's logical that your subconscious filters that in, whereas otherwise it's not essential to you. It doesn't. You don't really care. You don't have any concern for it otherwise. And that's why when you listen to other people, right away you'll know that they're teaching or talking or parroting what they've learned from my content, because Here you go. You got equal highs over here. This is a relative equal high, or the order block's a dead giveaway. But the point is you will know where my fingerprints are on people. Okay, because spend any time with anyone, and you'll know the influences they've had. You know, the way I end conversation, good luck, good trading. You know, that was an impression that was made upon me through Larry Williams back in 1995. You know, it was like something that's like, wow, it makes a lot of sense. I like that, and I'm going to say that to everybody that I talk to about the markets because it feels good. It's like Stan Lee from the Marvel, universe. He would always say Excelsior. That's where I got that from. That Excelsior comes from Stan Lee, because I used to draw comics as a young man. I used to, that part of my childhood still makes its way into my character as ICT. These signatures that you make significant because you've captured them and you've annotated your charts and you refer to them once a week, you are growing an affinity for that. And because your eye sees it over and over and over again, this becomes eventually, for some of you, your entire model. Now, what is the model? You're expecting lower prices. Okay, well, what would facilitate a lower trade move? Well, you have an imbalance in here. Chris Laurie's group would say it's going to rebalance up to here. Okay, we don't do that here. No disrespect to Mr. Laurie, but we don't do that here. Now, that could happen. But what we teach is there's got to be a combination of elements. Okay, what signatures overlap to justify the idea? We're not looking always for a single candle like this to completely fill in and rebalance. That's not always the case. What would facilitate a non-event for filling or not filling is one of the things I'm showing you here. This lower red level here, that's the low of the bearish order block. And the opening price is up here. All right, so that's what these two levels are. Go back and rewind the video. You'll see, and last week I talked about it as well. But we have an imbalance here. I teach and I have taught now, this is mine. This is how you know there's an algorithm, okay? Some goober on Instagram was posting there is no IPTA, and it's all made up. And listen, for any of you in here that feels that there is no interbank price delivery algorithm, that is absolutely programmed to go to specific price levels and not any further. Okay, you are in a position to argue the point that how is it that all of the things that would otherwise be responsible for price going to where they are, Elliott wave, supply and demand, Dow theory, moving average crossovers, the myriad of indicators that create overbought and oversold and divergence, okay, all of these things, these ideas, okay, how is it that if you remove all those red herrings, because how is it that the market is going to these very specific price points that I'm teaching you, and other schools of thought would be failing? Harmonics would not be lining up with certain things. Like I said, Elliott wave wouldn't be lining up with it. Wolf waves aren't always lining up to certain things. There's all these things, these distractions. Okay, I have removed all of that, and I've placed your eye on the very things that matter most, and it's the delivery of price based on the narrative that the algorithm will seek to follow. Now, if there is no algorithm, how is it that the markets go to these very specific price points that are not supported by supply and demand, because you have a whole bunch of zones to choose from? They're not based on harmonic patterns and a myriad of different Fibonacci retracements. Okay, they're not. The secrets of the world economy is not solved by triangles overlapping on a chart and calling it an animal pattern. And I mean that not to be disrespectful or comedic. I'm telling you, all of that stuff is nonsense. Okay, the central banks of the entire world are not hinging the basis of their currency going up and down relative to a harmonic pattern. It's not happening. Okay, there are so many things that are happening all around the world. Artificial intelligence is what's being utilized here. And before AI was introduced, people, real people, would price these markets just like I'm showing you here. Okay, so they're just things that they've always done. They just automated it. And also the idea that every buyer and seller makes the market. In other words, there's an entity there that wants to buy $20 billion of euro. So the market's only going to go to a specific price point because there's a buyer or seller that matches that 20 billion. It doesn't work that way. It does not work that way. Okay? It doesn't. As much as you all been told in books, and you have all these other educators out there, or I know somebody that works at a bank and ICT's full of crap, you don't know anybody from the central bank level. Okay? You don't know that. You might see these people that are getting on here and talk online. Oh yeah, I'm the so-and-so of the central bank of this and that. They aren't programming these algorithms. They're just the face. And they aren't even privy to things that make these markets. They're just like our president. They're puppets. They go up there and they say things, and they're the person that gets all the blame. They might get credit for some of the things, but most of the time, they're the person that everybody's attention is placed on. They are the red herring. All these things you learn in the marketplace, they're all red herrings. All of them. And it was very difficult for me to pry myself away from what I believe truly in my heart was the real secret of finding consistency in the marketplace. A 50-day moving average, coming right out of Larry Williams' How I Made $1 Million Trading Commodities Last Year book from the 70s. The book's still relevant today. But that 50-day moving average, if it's angling up, regardless of what its higher highs and higher lows, who cares? If it's angling up, that was my bullish trend. If it's angling down on the daily chart, that's my bearish trend. And I only looked for buys and sells based on that. And then what was my entry? It had to be oversold if I was bullish in a 1 hour stochastics. And if it gave me a type 1 standard bullish divergence then I would be a buyer after it rallied up. So I would be buying on a stop. I was always buying strength because that's what was trained, by way of looking at Larry Williams stuff. He was not really teaching buying weakness when it's underlyingly bullish. It was always him buying strength. So that signature was impressed upon me as a trader. Same thing when I finally learned how to go short. The 50-day moving average on a daily chart would be sloping down. What's the slope? I never really had a really clear formula to determine, okay, what would justify a 50-day moving average sloping? It had to be doing it for a while, for 6 months minimum. That was my filter. That's what I eventually worked with. And a lot of times I would get caught with trend reversals. But, that's one of the things I just chalked up as I was wrong. And I would look for a 60-day moving average, a 60-minute overbought bearish divergence on the stochastics to set up my entry. And or if it was in a real strong trending move, I would look for a type 2 trend following, which is what everybody calls a hidden divergence, which Nick Van Ice was the producer of, and it was not George Lane, the supposed creator of stochastics, which is false. You got to know your real research and do some research on all that stuff, and you'll find out that a lot of these authors, I get accused of all this stuff too and saying, oh, you renamed something, you're trying to get credit for something that's always been around. Listen, what I just outlined here, that's not anywhere. The order block, not anywhere else. It's not a zone. It's a specific level. It's in a narrative that makes it a order block. And now you've been taught a entry technique, which also isn't anywhere else out there. Okay. It's not Chris Lurie's filling in a void. Okay. It's not any of that stuff. It's based on a signature that the algorithm will do over and over and over and over again. But it will make, for some of you, that's your entire model, where this is being shown on a 15-minute chart. If this is a daily chart, the number of pips between here and here could be significant, much more than what's being shown here on a 15-minute time frame. So the problem with some of you as students coming in, you'll see me articulate a great deal of verbiage over top of a short-term time frame chart, and you'll say, yeah, but I don't want to be on a 15-minute time frame. And you're missing the real clarity of what I'm showing you. Price is price. It does not matter unless it's very specific in terms of intraday trading and scalping. Everything I'm talking about can be applied to higher time frame charts, and you can form fit that to whatever style you want. If you want to be a long-term position trader, if this happens to be a weekly chart, look at the number of pips that could eventually be harvested if this was to unfold and you had the same premise here. This is a 15-minute time frame, but if this whole price structure and the narrative I've outlined thus far pertaining to this example here was a weekly chart or a monthly chart, good grief, like you have an enormous edge to trading with a long-term bias in this whole context. If each one of these candles was a week or a month each, That's a great deal of potential pips that could be had by doing this very thing. And again, this is just a suggestion to kind of like whet your appetite in terms of looking for how certain things would overlap. And once it makes sense to you, and for some of you this would make absolutely no sense, and it's probably going right over your head, and you want me to go to the next chart and talk about something else. But for others in here, something else just clicked. You're like, oh yeah, I have seen that, where an order block will overlap with a fair value gap, and it's inside of the narrative, and then I can start seeing the low resistance liquidity runs that would otherwise be forming with all that in play. And then everything starts to click. So for some of you, this won't be a model for you. For others, it's like, this is exactly what I see happening all the time. And now you just got pushed further into going further with that in terms of investigating it, looking for it, and you'll see it forms. Like everything that you're going to try to apply in the mentorship is going to be reduced to the things that make the most sense to you. And it does not reduce the efficacy of all the other things. That's what mentorship is. It's not you coming in with your preconceived notions on how you should learn this and how you should learn how to do the mentorship and then cherry pick what you want. If you come in with that preconceived notion that you're going to come in here and already know what your agenda is, I'm going to learn this, and then I'm going to put that together. That's not how this works. Nobody's ever came into mentorship like that. All the success stories I have is stemming from those individuals that came in flexible and said, okay, I'm going to learn how he teaches it and I'm going to submit to that. And then they start dabbling with keeping journal entries, and then they start seeing things that jump off the chart. This won't jive, okay, to everyone. But for some of you, it makes perfect sense. And that's how you know you're progressing. Now, in that same statement, it does not mean that you're not progressing because you didn't agree with this as a model. It just doesn't suit your particular personality and what you've grown an affinity for in the tools thus far in your learning in the mentorship. It doesn't negate the validity of your model if other people don't subscribe to the same view you have. These are my babies. I can put these together and make anything I want out of it because I've been doing it for so long, and they're all intimate to me, and I know where they place themselves in the form of usefulness, and I also know when they're likely not to be in the marketplace, which promotes uncertainty. But when the moments are right for you to be expecting a direction, a stage, which the stage is showing a willingness to want to go lower with this imbalance here, but then couple that with, we already know right away when we see a large candle like that, that is a SIBI, sell side imbalance, buy side inefficiency. So the candle that starts the low of that is here, but it was augmented with this candle creating a higher high there than this candle. Not by much, but it was enough. But we also have the daily higher time frame narrative, which is that bearish order block, the low of that candle. So we have the condition that, or the narrative that sets up the directional bias. This is showing it wants to go lower after it has ran above an old premium array on the daily chart, which was that balanced price range. This is the high of it. This is the low of it. So it's reached up there and then rejected. We don't need to be a seller up there. We just want to wait for this to occur, this imbalance. Then, does this imbalance offer any other support to an other signature in price, which is that bearish order block on the daily chart, which is that low, which is this level right here, okay? By coupling that, and then it overlaps with the institutional order flow entry drill technique. So that's your entry. Your pattern is the SIBI, and the narrative for the bias is the fact that we ran above the balanced price range on the daily chart, and it's broke down. It's shown a willingness to want to go lower. So all of this is a rush to go lower. The algorithm will want to offer traders that know what I'm teaching you at the bank level to be short at that price level, not requiring it to go up to here, rebalancing any of that, because this is a gap. Some gaps, you want to see them remain open, not close in. That's what differentiates me from Chris Laurie's discussions on liquidity voids, which he didn't create and he's not the godfather of. Okay. Again, no disrespect to him, but I get so many new people coming in here and they just constantly harp on the fact that, I'm teaching Chris Laurie stuff. I'm not teaching Chris Laurie stuff at all. None of this stuff is Chris Laurie stuff. But this is algorithmic trading. And IPTA, while it doesn't exist by name, the interbank price delivery algorithm is what I call it. That's what I named it, so that way my children would understand when I say the algorithm, it's referring to that. What is the IPTA algorithm? It's a mechanism, okay, that delivers price to specific price levels to effectively provide areas where liquidity could come into the marketplace. Not always is it going to where liquidity is. Sometimes it's going there to create and engineer that liquidity. Okay, and you learn that in the mentorship. So while most of the time we can understand the premise of equal highs being rated to knock out existing buy-side liquidity or running below equal lows to knock out sell-side liquidity, that's commonly understood now. I made that very apparent, and it's found its way through everybody's technical analysis now. But there's other forms of engineering liquidity where the market will go in a direction into a specific price level that facilitates the underlying basis of formulating and engineering sentiment, which will also build liquidity at that level. In other words, you ever look at a price chart and say, why did it do that? And then later on, it makes perfect sense because it engineered that liquidity and it rated it later on. So usually it's like what we saw in crude oil, where it spiked up when little news of Trump saying he's going to retaliate with Iran if they do any sneaky attacks. And then it dumped really, really hard. So it went up, and then it went up one more time to rate it the very next trade day by a little bit. And that same premise is what I'm showing you here with the institutional order flow entry drill. That entry pattern, that's what's being done, or what was done on crude oil right before it slid lower. Okay, when it was in the 20s, 26 or 25, whatever it was, and then it dumped down below $1, down below zero, and went down negative $40 a barrel. That you go back and look at crude oil, you'll see what is being shown here exists in crude oil. So it's something that if it matches your personality and you have a tendency to lean towards this view of my concepts, don't shun it and say, I want to find something better. Because if you start seeing these things happen, and it may not be this, it may be something like a breaker, fair value gap, and a higher time frame order block that overlaps. Okay. If you remember back on Baby Pips in 2010, I said, I need 3 things to take a trade. 3. I only need 3 things. Here's 3 things. The willingness to show you what the bias is. Okay. It quickly wants to go lower. What is it leaving? A raid above a daily range. What's the range? The balanced price range. That's not an obvious thing in technical analysis. It's not supply and demand. It's not Chris Laurie. It's not Sam Seiden. It's not, Joe Schmo's Mentorship, Have It Your Way, LLC. It's none of that stuff. Okay. It's mine. It's me. This is what I saw in price action. This is what I learned from those 2 gentlemen. And what they showed me in terms of how prices booked, I saw in my own losses, and I reverse engineered it. And I said, okay, what keeps repeating? And once I saw that, it opened up more and more and more. And then I started getting visibility and prayed for more understanding, and I received it. So that's what this stuff is. There's no source for me to say, okay, hey, look, go over here and study this and you'll understand more about IPTA. I'm it. This all started here with me. I am not taking other things and ripping them off. I'm not renaming any of them, okay? When I say this is what it is, it's what it is. And I have proof of it because having seen it for almost 3 decades now. Journal entries, experience doing it, trading it, teaching it. It's just, you can't escape it. It's really there. But when you have 3 things that agree with your idea, as long as it's in the direction of the institutional order flow, as I explain it, not volume profile, not all this other stuff, point and control mechanism. No, it's all nonsense. That's all stupid stuff. You'll see these point of controls before they actually are visible on volume profiles. You'll know what those prices are going to be, more specifically to the price, where they may be very, very, very close. If people that are in this mentorship, if you have come from volume profile, or you've been interested in studying volume profile, you're going to see that the things I'm teaching you deliver the evidence of what the market's going to do before volume profile shows it to you. Many times days before. Okay. So again, I don't chase those gimmicks. They're all gimmicks. And if it helps you make a trade and it's a crutch for you, there's no shame in that. Because remember, I started with moving averages. I used Williams percent R. I used all kinds of other stuff, stochastic, all this. I did all that stuff. Okay. And at the time, I believed wholeheartedly that they were useful and beneficial to me at the time. But I was applying lipstick to a pig. The pig, whether it's facing me or facing away from me, okay, it's still a pig. But I would always put the lipstick on the wrong end, okay, and I'd get stuck with something that didn't smell right. All right, so I would never say that it was my tools that caused it. It was the market that did it to me. Okay, and I have since changed my paradigm to I have been the problem. And when I make an error and I do it wrong, it's not them getting me. I did it wrong. Where's the responsibility lie? In my hands. Whereas before, as a younger man in my 20s, it was always easy for me to say, oh, they got me. Oh, they ran my stop. Oh, they did this to me. And does that teach or promote self-responsibility? No. And I couldn't develop because I had that mindset. And when I became responsible and mature, and I assumed all responsibility, I assumed all the risks, okay? I made it my problem if I lost, not they did it to me. There is a they out there, okay? And you're learning how to work with their intentions. If you're on that side and not offside, you're going to find that trading is easier. It's less stress. It's not something you got to do every single day. You're not impulsive. You're not trying to chase something every single session. Because most of you that are young, not just simply in age, but in your infancy in terms of development as a trader here, you're feeling this impulse to be doing something all the time. And I'm telling you, the things that you're supposed to be doing the most of is what I just showed you here. Go back and look at charts and see what things were happening over and over and over again, and what other things led to this level being reactive. Because if I wouldn't have had these lines on here showing the order block, you would just say, oh, this is that institutional order flow entry drill running relative equal highs. That's all that was. When it's not, it's a higher time frame PD array, which is the bearish order block here. It's coupled with that. So you got three things. You got narrative. This is the IPTA signature showing you that it wants to go lower. It's proven it wants to go lower because it does so. One single candle reprices below the order block. Then it trades back to, bumps the order block again, creates relative equal highs, and then poof, it hits it. If I take the lines off, you can clearly see we have relative equal highs and an imbalance here. You can see this move here, this high being taken with this right here. This is your low. So this drop down is the lowest between this high and this high that ran all of these highs and ran this high here. So it's this candle right there. That's your breaker. It trades up into the breaker, and it's coupled with the bearish order block and institutional order flow entry drill. So you have multiple things there. So even if you didn't see the relative equal highs that's being rated here and it goes lower, you have a breaker also. So now you have four things going for you for this setup. All right. So again, if you take everything off, it doesn't look so apparent. But when you start annotating your charts and saving them and referring to them on the weekends and looking back and say, okay, now I've looked back through this week, Monday through Friday, go back and look at the previous week and look at the previous month's daily ranges. And in response to that, look at how the weekly charts have fleshed out as well. That's where all the work takes place. It's not just the hours and hours and hours I force you to go through each month when you get new content. You have to do that too, but you still have all the other work of you collecting your own snapshots, and that programs in your brain the things that are important to you. If you're really high strung about, you want to be a breaker trader, you want to be a bearish order block and bullish order block trader, if you want to be a SIBI trader, a BISI's trader, or if you want to be, you only trade mitigation blocks, okay, that fits a narrative that's being shown here, like something like this, okay, any of that is perfectly normal. It's fine. It doesn't make any one particular student in here better because they choose one approach or model over another, because your bottom line is not going to be indicative of what they're doing, and vice versa. It's independent thinking here. Everything that you're learning is going to flesh out a unique price action model for you. I'm suggesting things along the way to stimulate that thought process. And while it may not feel very clear to you right now, I promise you, once you go through the entire content and you start going back in areas where you feel weak at, things will start snapping and going, oh yeah, now they'll bridge. Okay? You'll get these disconnections bridged with new understanding that comes from you applying, like I'm showing you here, by going into the charts and putting the lipstick in the charts, even if it's hindsight. Don't be discouraged if you don't have the time to get into it live, if you didn't see it set up live. It may have happened to you where you were expecting it to go higher here. Okay, maybe you thought that this BISI rebalanced here and you thought it was going to go higher and rebalance that. Don't look at that and beat it up and say, I'm not going to do that. Do both. Outline the fact that you looked at it and thought it was going to go up here based on that, but then do it like you've expected exactly how it unfolded in the chart, and annotate just like you would have done it if you were right about it. And your subconscious will do one of two things. It will see what you've outlined and retain it as, this is a good feeling, because that's what you're supposed to be doing. You're supposed to be telling yourself, this is what happened in the marketplace, and you talk in your annotations like you did it. So in a lot of ways, in your own personal journal, you're pretending to be what all these fakes do on Instagram. Yeah, this is the trade I took. Okay, but you really do that in your journal. Okay, I see this happening. This. I'm happy. I feel rewarded that the price action delivered exactly like this concept says it should. Versus, I was completely surprised by this, but it was still neat to watch. See the difference between that? You're giving yourself permission to absorb and retain that as experience that you really, realistically didn't get. But it's tricking your brain in a way where it tells you that's experience that you got for real. And because you have tricked your brain and you filled it with valid information and facts, your brain remembers it. It's like that little footprint in the snow when you're out there tracking elk and deer and whatever. When you see that footprint, you're not going to be like, what is that? Your brain's going to say, oh, there's a rabbit print. Oh, there's a raccoon print. Oh, there's a coyote. Because you've seen it, you know what it looks like, and when it pops in front of you, there it is. But to someone else that's never stepped foot in the woods, they walk out there, and you say, what is that? Oh, it's a dog print. Well, you'll know right away it's something entirely different, and it'll be funny to you because they just don't know. But you take it for granted because it's the second nature to you. That's the goal in your analysis. But you get there by conditioning yourself over and over and over again with the work of journaling, getting in there, making your journal entries personal. They're not meant to be shown to anybody, not me or anyone else. So everything that makes sense to you in hindsight, that's what you dress up your chart with. And you do as much as you possibly can. And you review it every week. And then you go back and look at previous weeks and then the previous month. And you constantly cycle through that every single week on Saturday or Sunday, whenever you have the opportunity to do so, undistracted. Your spouse, your boyfriend, girlfriend, kids, whatever, all of them, your pets, take them away from the situation. Go somewhere in your home, quiet, and just go over your charts and give yourself time to not be distracted and see these things in your annotations and retain it. And constantly tell yourself that negative is not acceptable. You can't talk about anything negative, because if you do anything negative, your brain will hardwire that this is adversity and adversity is uncomfortable. Therefore, pay no attention to it, block it out. And then you will find that your learning curve is going to grow steeper if you're a negative, toxic person. All right. So anyway, that's that. Let's go and look at the euro dollar. All right, so euro. So here's euro. I said that if I was running the euro dollar, I would run this low and then start to send it higher. It did that on Thursday, and intraday it had a little bit of a pop and then gave up the ghost again and went a little bit lower on Friday, but then still did pretty much what I was talking about on Wednesday's video was one of the scenarios if I was bullish. And again, I'm not trying to take credit for being right or wrong about anything. I'm just saying that it has shown its hand doing one of the scenarios I was outlining. It'll be interesting to see if we can get above or even back to the mean threshold of the bearish order block here on this up close candle. But I want to drop down into the hourly chart. Okay, and you can see we did run relative equal lows, rallied higher. We have an order block here. So if we do have an attempt to get back down again and sweep below this level that's been on our chart for weeks now, just watch this candle's open at 107.70 to 107.75 in that area. It could, I don't think it should, but if it did go below that level again, this order block needs the support price. My attention is here and above here. And if we look at, I guess, the idea that the dollar potentially could go lower. Okay, let's go with that narrative for here. That would support this going higher. And again, it would be aiming for stops. So we have relative equal highs here, relative equal highs here. And we've done the work of running lower here and really rejected. So I wish this would have gained more momentum Friday. Relative equal highs here and relative equal highs here for euro dollar, and the high on the euro dollar for this equal high is 108.85. So 108.85 to 109. 109 is back here with these relative equal highs, and this high here comes in at 108.96. So the next level up 5 would be the round big figure 109. So I'll be looking to see if we can get up into that. It just makes sense to follow that narrative going forward with the dollar index, I personally believe. Dropping into a 15-minute time frame. All right, and relative equal highs in here. We have a little bit of an imbalance with a bearish order block right there. So 108.65, I like that, and that would be nice to see it run these equal highs, relative equal highs, okay, for euro, should the dollar find its way higher. And let's go to the daily again and go out to cable and wrap this video up. All right, so we have British pound on the daily chart, and to me, if we have that weaker dollar, that they're going to take this British pound higher and sweep this high. This imbalance here all the way up to this gap on this candle's tail, I still like that level. To me, it would upset so many things, because we had this big drop down, we rallied up, started to drop, and then they jammed it back up one more time, and now everyone sees this as these highs in here. They're going to look at that as a run on stops, because you have all these equal highs in here. They hit that, and now they're going to look for a breakdown. To me, it looks too obvious. It looks too good. It looks too good for that. And it would make much more sense, given the current climate in terms of risk, to see them just completely run it above here. And I still believe that the cable will outperform upside versus the euro dollar if we get a weaker dollar. And how we accelerate, if we get at all higher above here and into this, it would need to do on a closing basis above this level that I've outlined for weeks now before I even consider going up into here. All right. I don't think that the removal of the lockdown situation is going to create a dynamic, explosive type reaction in the marketplace, because, like I said, it's going to be a slow rollout in terms of what's permitted and which, well, not permitted, but guidance is going to be given about what limitations should still be enforced. And it's still going to keep some measure of fear over top of people. And certain states have released the limitations on certain businesses, like hair salons and barbershops in the South. They got a lot of business right away from people having their hair too long, but I'm sure there's a lot more people sitting at home with longer hair than they should, not wanting to go to the barbershops. They're all sitting and waiting. Who's gonna be the guinea pigs? And if it starts to ramp up the next 2 weeks and new sickness levels produce, that's going to be the telltale sign. But if we don't see like this big, movement towards relaxing the lockdown limitations in the UK, then it's probably going to be difficult for it to see that type of thing happen. But if they start limiting or removing the limitations on social distancing and shops and businesses start to be made available to folks there, then this scenario would really promote an easy run up into this level here, and maybe even get overdone by running here. That would be a perfect precursor for them running it that way, and it would fit the model of breaking up anyone that wants to sell short the cable, and it would be like, oh yeah, everything's good, and then once it gets here, then they can go back in the it's not good and start sending it lower, and then later on in the year rebalance this. Okay, that's some of the things that I'm looking at. That's one of the things I made a mention in my own journal on Friday, looking at how it closed on British pound. Some of the things that are in my notes were what I just said here in response to what we saw a few states in the U.S. do by letting businesses open up. I am not in the UK, so I don't have that type of information readily available to me. But if you are a member of the mentorship and you follow me on Twitter, if you start seeing a relaxing of the limitations in the UK, I would appreciate just giving that sound bite to me in a tweet. That way I can follow along as best as I can from people that are actually living in the UK, that are members here. And let's drop into an hourly chart. And you can see really last week was just a nothing burger for cable. It just didn't do a whole lot of much of anything. We rebalanced this in here, the SIBI. My eye just keeps going to these levels up here. Okay, this looks like a real big thick block of price action where they should trust that as support, broken term resistance. It just feels wrong. It just feels wrong to have that faith in that. And I think we're going up here in the 125s again. How soon we get there and how we get there remains to be seen, obviously. But that's what I'm watching going forward for British pound. On a 15-minute chart, nothing again as well. I have a little bit of a SIBI in here that was rebalanced to there. And it's just, to me, it makes much more sense for them to come up higher and upset what's already established in price action for British pound. And I think that's going to be it. Real quick, let me throw S&P in just for completeness sake. All right, so here is the S&P, and I know that you're watching this video and you don't see the prices on the right side on the axis, and that's okay. It's not necessary because I'm only commenting on the price action itself, and it's forcing you to go into your own charts. So zooming in. All right, so we have price for S&P. I have all your attention right here on this volume imbalance. Every time we brought S&P up, I said that what really sets the stage for me, if we've made a bottom and say, we're not going to go any lower until the fall, which I think we will be in the fall, significantly lower, this volume imbalance needs to be closed and closed with an up close above it. If we do that and trade down to it again, in other words, we have to close above this volume imbalance, any price, I don't care, and then trade back down to it. Okay, if we trade back down to it and start to rally, that is what makes this low significant, and then we'll probably run these higher. I mean, these highs out and go significantly higher. On what basis? Just complete utter nonsense and no reason. This complete manipulation is what it would be, or running it up there to take anybody that's holding shorts that are profitable out before the fall, and then it just gets decimated in the fall. Because really, the companies have shut their doors for good with all this stuff. Okay, economic stimulus and loans and all that other stuff. you'd be surprised how many people that own businesses that are not really savvy, and they don't really run a good financial book. They don't do very well. And 80% of businesses fail in the US the first year or two. Okay. And something like this, nah, we're not going to, there's no real reason. Amazon's killing it because everybody's home and they can't go anywhere. So it just makes sense to buy, buying all those things from Amazon online because you can't go out to the stores. And I'm guilty of it too. I've spent thousands of dollars sitting home because I can't get out and shop. And I don't really shop, but being in the house with people, all the time, like my kids would normally go to school. My wife goes out and does what she wants to do. My introversion doesn't feel like introversion anymore. It feels like, they're encroaching on my on my peace of mind all the time. There's no safe place in my home now. They all follow wherever I go. But this volume imbalance to me is the real delineator. It tells me if we're really going to be moving higher and to take these out. But it has to do what I just mentioned earlier. And this volume imbalance right in here, we've rebalanced that. We've taken out some sell-side liquidity here. And to me, if it goes above the volume imbalance that we've been talking about, and this is what I said, it can go up to that and rebalance that. But it is still bearish if it just fills it in and doesn't get above it. If we go above it and close and then trade another candle or candles back down into this volume bounce and act it as support, in other words, the fact that we trade up to it and through it just rebalances the buy side that's missing. To balance it, okay, it has to trade back down into it again, offer the sell side that's really only been given one time on one single pass with this candle. Okay, so we want to see the volume imbalance become a balanced price range. And then that would allow me to feel confident with going long on SPOOs. But I'm not really looking to do that. Okay, I'm not. But if that scenario would happen, then yeah, I could go in there and start doing some day trades, trading SPOOs. But right now, again, it can go either direction, and I'm not playing 50-50 roulette. I'm just not doing it. And I don't care about being able to say I called this in the pandemic. I've already said that. It's common sense, okay, to dial back the level of risk right now, okay? We removed the joker in here that's been problematic really since 4 months into the mentorship. He's just been just a negative person. And I don't censor people's opinions for the basis of, being a control freak. But I do not tolerate people in my mentorship in the forum at charter level. They're the only ones that can post in the forum. Generally, most of you are very respectful. Even if you have a opposing view, it's been posted and shared on the forum in a capacity where it's fine. Independent thinking is what I want. But I don't want rude and disrespectful opinions about me and my personal faith and my belief in Scripture and preparing myself and my family for something I firmly believe in until proven otherwise. And if it doesn't materialize, I'm still going to believe what I believe. It's what I live by. So, but to attack my character, to attack my faith, my what I believe in, and the fact that we've been in this pandemic, okay, I've already told you I'm not touching the market. I'm not doing it. I don't trust my own analysis. And to have one person have an opinion about one move that was the only move that's been right in his own expectations for months, and the same person would be sending me emails saying they want to quit because they can't make money, they can't find consistency. That's the same person that I removed from the forum because now his toxic stuff that was just shared with me on a personal basis in privacy, he was now exhibiting all that towards other members and to me in the membership. And I don't let that happen. Okay. It's not because I'm scared or I'm being outdone or outshined by him. He can clearly go on Twitter and do all this monkey business there, and it's fine. I invite it there, but conduct yourself respectfully in the forum and conduct yourself respectfully with the other members. You're given a voice in the forum so that way you can be respectful to your brothers and sisters in this community. It's not a cult. You don't have to love everything about me, and I don't want praise. Okay, you're not in here to praise me all the time. You should be bouncing ideas off of one another and sharing what observations you're finding because it's encouraging to other people. And what's nice is if you do that and you participate, because there's a lot of people in our membership that don't really participate even once they're charter members. They just don't talk. They stay quiet. And if you're a person that shows your, participation in the process of going through what you're supposed to go through in practicing and learning and failing and continuing through, you're actually going to be a greater help to yourself, because not only are you removing that stigma of, I don't want people to see me fail. Failure is part of this. Every single trade you enter is a failure. You got to overcome the spread. It's a losing trade. As soon as you open it up, it's a loser. It has to be allowed to develop into a win. And you have to close it while it's in a winning side of the spread. So everything starts as a loser. Just like your career here, okay, as a trader. You're a losing trader. Right from Jump Street. Everyone is. Everyone is. No one jumps out here and starts making money and doesn't fail initially. They do. Everyone does. That's part of it. And there's power in that. Failing and coming back from that is confidence building. I'm not worried, okay, if I make a bad call. I'm not worried if I get it wrong. And I'm not worried about when I say I'm not comfortable taking risk on right now because it doesn't make sense to do so. I'm not worried about the opinions of others, weak-mindedness, looking at that saying I'm soft or I'm not as good as I say I am. I'm every bit of sound as I ever was, and more so now. I'm proud of myself for having the ability to lean on my concepts and experience that keep me from getting in the marketplace right now, where in honesty, I would have had dozens of losing trades back to back. I would have personally have had that many losing trades. But because I know the climate that we're in and I know how I operate and how I think about things, I've avoided that. And being a mentor, if I have experience in doing something or avoiding things that would bring a problematic result or adverse result, it is a disservice if I don't share those things at the time. So if I'm right or if I'm wrong, it doesn't make a difference. That's not the outcome. The consistency is what's really the aim here. You're going to see me get it wrong. You're going to see me get it right. But the overall time period, and do I go in here and just try to throw the dice? No. And nobody with the expectations of trying to train someone else should ever invite them to be in an environment like we are right now. Again, go back and look at oil as a perfect example. That did things that nobody was expecting. Nobody was expecting that. And that, who knows how many people got hurt with that? Who knows? We won't know probably until months from now. But that is still the environment we're in. And I'm not trying to take that kind of risk on. And you shouldn't either. So listen to people that, give good sound advice, not, very emotional, argumentative, and vindictive, venomous people. And I don't let that happen in the mentorship. So if you do that, and if we moderators that we have that you aren't allowed to know who they are, if they see that, then they're going to report it to me. And if I see the post and it's just toxic, you get one warning from now on. One warning. I gave that guy, Trader Mike, multiple times to get himself together and removed his posts because they were just toxic and attacking other people. And it's just, we're not in a place for that. Okay. There's social media for all that stuff. But in my house here, you got to be respectful, not only to me, but to other people here, because you didn't pay to have some nut job that isn't successful come in here and play a troll. And I'm convinced that he was probably taking screen captures of the things he was saying and glad handing with his buddies saying, look what I said over in ICT's place. Meanwhile, the guy's not unprofitable. He can't trade anything. And I don't care what you think about me by saying that, because that's the other side of the coin you don't know about. So he's unstable and he's disrespectful. And that's the reason why he was removed. And anybody else that acts like that will be removed too. So that's the second person, okay? FX Red Leg, I removed him, and now this guy here, Trader Mike. I've only removed 2 people for that reason. Any other time, they've been removed for sharing or teaching or repackaging my stuff. Everyone else is left alone. And you can disagree with me, and you can say it in a way that's very respectful. Say, I think ICT's got it wrong here, and here's why. I don't have a problem with that. You'll never hear me say anything bad about that. That's independent, free thinking. That's what I want you to do. I want you to do that. And I also want you to not need to see what I have to say about the marketplace. And that's where we're growing gradually away from pointing to forward things and only talking about the hindsight, because it's going to force you to say, okay, I got to step out there now. I got to start testing myself and give myself the ability to be uncomfortable and learn from those uncomfortable setbacks that are not utter failures. They're just stumbling, and you get back up. You learned, hey, if I walk too close to that wall with the lights off and my eyes closed and dizzy because I'm disoriented, I'm probably going to stump my toe again, and it hurts. So I'm going to walk a little bit more careful here. Demand some more light before I take a step. Okay, and that means you may have to ask for a light to come on. What is that? More information. More information. Right now, I'm demanding more information before I participate in any of these markets, period. So let's take a real quick look at the hourly chart on S&P. And relative equal highs, they really jump out. We have the lower of the more recent one here. So it looks like they want to run it. To me, 28.85, 28.90-ish. Okay, still looks like it's possible. And I like how he came down into this BISI, rebounds that. Didn't quite surge above this high like I would have expected to see it do on Friday. But if it's reaching for here, it doesn't really matter to do that. So we want to watch this order block here. Okay, watch this one here. Extend that out in time. If we get any kind of correction lower, might get a reaction off of that. Also would close this fair value gap and not get the order block here. So in other words, what am I saying? This. Okay, so a small little fair value gap there on the hourly chart. It could drop down into that, not even hit the order block, but it could do both. Close this, then hit the order block, then react higher and make a run for the relative equal highs on SPOOs. The lifting of the limitations on social distancing in businesses, if we go for, like, say, the next 3 weeks and we don't see any kind of spiking in the states that have been used as guinea pigs, in my opinion, to see if there's any kind of resurgence of the virus and the cases of it, if that transpires without any kind of obvious, evidence that it's starting to ramp up again, then as we go forward, my bearishness on the S&P will be pushed to just the last week of August to September-ish time period. But I'm absolutely bearish on the stock market this fall. I don't care if we open back up and go right back to everybody can go anywhere. We will still see up to two and three quarters away from where we are right now, the impacts of what we've been forced to do here in the States. So we're not out of the woods in terms of the economic impact that this is going to have. I'm telling you, there are so many large funds right now that still hold shares of stocks, and they would love nothing more to let this go higher, and they remove themselves from the risks that's still underlying. And I'll leave that for you to argue and disagree with or agree with. I don't care one way or the other. You're asking for my opinion every week. This is it. And do we have everything in place for this to just go straight higher and up to new all-time highs? My personal opinion is no. Okay? And I think that's going to be it, folks. I will catch up with you by way of Twitter. I'm certain of it tomorrow, Monday morning. And then if there's anything for me to call out your attention to, I will certainly do so. Enjoy the rest of the weekend. Until then, good luck, good trading.